Hello traders, hope you're doing well. In today's video, we are going to discuss about a very important and interesting topic which every intraday trader has to know. The topic for today is how to avoid false breakout. Now the main reason why I decided to do this video is because in my free Telegram channel, which has around 23,400 subscribers, yesterday I asked this question: what do you find difficulty in trading? In this, 41% of the people said they are finding it difficult to identify a breakout, and 59% of the people they said they are not sure how to avoid false breakout in the market. Close to 1700 people voted. So majority of the people are having this problem in trading. Now the goal of this particular video is to solve both of this problem. I'm sure by end of this video, you will never have this question again. Today we are going to discuss how to identify a breakout and enter at the right time. At the same time, you will understand how we can avoid false breakout. Both of these things will be discussed in today's video. Now, I would advise you to watch this video without skipping because there are a lot of interesting points which I would be covering in this video. I don't want you to miss those points. Alright, so let us start. Now traders, the first thing that we need to understand is why people are interested in breakouts. This is the first thing that we need to understand. The main purpose why people are interested in breakout is because if we identify a proper breakout in the market and if we enter at that particular breakout, there's a high chance that we will make 1 to 2% return on the total value of that particular stock or index. This 1 to 2% move is very huge. For example, let me tell you, Nifty is trading, let's say at 17,300. Now, if you identify a proper breakout and you enter the trade, there is a chance that you can capture 170 to 200 or 300 point momentum in just one single trade. If I have to put this in perspective, if you capture 170 points, and what is Nifty lot size? It is 50. So if you enter a trade where you make 170 points, then there's a high chance that you will be making somewhere around 8,500 rupees. This is just with one lot. Okay, now this is a huge return. Just imagine if you have entered with 10 lots, 8,500 into 10, it's around 85,000 rupees. So this kind of return we can make when we identify a proper breakout in the market. There is also a possibility of making 200 to 300 points return. The returns are going to be even huge than this. That is the main reason you see a lot of people marking support and resistance level, drawing trend lines, identifying important price action patterns. All this people do because if the breakout happens, you can expect 1 to 2% move in particular index or that particular stock. Now let me open a Nifty chart and show you some examples of a proper breakout. Now traders, before we discuss about how to identify a breakout or how to avoid false breakout, I would like to ask you a simple question. The question is, why do we trade? Now, if I ask you this question, what would be your answer? Now, I am sure that almost everyone who's watching this video, you would tell me that the main reason why I do trading is because I want to make profits in the market. All the time that you're spending in doing market analysis or even the time that you're spending to watch this video, the only goal is to make profits from trading. But the truth about trading is a probability game. What do I mean by probability? Probability simply means that when you take series of trades, there are going to be those days in which you will have to book loss. Now there is no strategy that would work 100% of the time. When you take series of trades, there are going to be days when you make losses. That is the probability of stock market. That is the main reason why stop loss was introduced. Now what is stop loss? Stop loss means, for example, let's say market was moving towards the upside, you identified a breakout, you entered the trade. But no one for sure can say how far the market will move towards the upside or as per your direction. It can move up to this level, or it can move even higher. But what you can do to a certain extent is, if your view is wrong, where will you cut your loss? Let's say you placed a stop loss here. If market comes here, without competing with the market, are you ready to exit the trade? Majority of people, what they do is they will wait and wait until the market reverses. Very late they will realize that if their loss is just 2,000 rupees where they could have exited, they will exit when loss is 5,000 rupees or 8,000 rupees. This is how many people lose their money in stock market. Now, why am I speaking about profit, loss, all these things? Because identifying a breakout or false breakout is also a probability. The sooner you realize this, you will start making very good profits in the market. Your only goal should be, you should not fight with the market. You should not worry when you make losses. Your only goal should be, when I lose, I need to lose less. But when market goes as per my direction, I will make more. Now, if you want to make more return when market goes as per your direction, then definitely you should be able to identify breakouts. Why you need to identify breakout? Because like we have already discussed, if you enter at the right breakout, there is a chance of making more than 1 to 2% return just in one trade. Now, this is the main reason why you need to identify a breakout. This is where the big money is. Traders, now we have come to the main session where we discuss about how to identify breakout and how to avoid fake or false breakout. First, what I will be doing is I will be giving you some examples. We'll be seeing some examples for breakout and fake breakout. After that, I will be providing you all the tips that you need to follow while you're planning to enter at a breakout. So let's start looking at the example. Now traders, this is a 5 minutes time frame chart of Nifty. Now in this chart, from here till here, if I draw a trend line with maximum number of touches, you can see market took support here, again it took support, but finally this candle we got a breakout. Some people will say this is a breakdown because market moved towards the downside, but let's consider this as breakout itself. So as soon as we saw this breakout, what we will do is next candle we will enter the trade. This will be our entry point. Our stop loss will be at least up to this level. Now some people will keep it above the breakout candle high, or some people will keep it little higher, because in case the market retest this level and then if it's moving towards the downside, that time we can escape. So keeping a stop loss little higher works better. This was our entry point. Our stop loss is somewhere here. So let's say you held on to this trade until the end of the day. Now if you had held on to this trade, you can see the stop loss for this trade is 50 points. 50 into lot size is 50. So the risk here is 2500 points per lot. Against this, what is the target? The target is 250 points. So 250 into 50, how much is it? So here you had a chance of making 12,500 rupees per lot. Now 250 points, how much is it? It is more than 1.5% of Nifty's total value. So that is the main reason why people prefer to identify a breakout. If they enter the trade at the proper breakout, this kind of momentum they can capture. Alright, now you have seen an example of breakout. After I speak about fake breakout, there are some interesting things which I would like to highlight to you. So watch the video without skipping. Now let us see example of fake breakout. Now traders, if you see here, if I draw a trend line like this with maximum number of touches, here you can see market took support here, second support, third support, fourth support. Finally, you got a breakdown. So this is the breakdown candle. Let's say you decided to enter at this breakdown. You will enter when the next candle opens. Let's say you kept the stop loss here and you expected the market to go at least up to this level. So this is our entry point. This is our stop loss and our target is at least up to this level. So the risk is around 55 points here and your target is 140 points. This is also close to 1% return of Nifty total value. I think it is somewhere around 0.75% of total value of Nifty. Now after you enter the trade here, market went little lower, but immediately it started recovering. It went little higher, it went above breakout candle. Again it continued to move towards the upside. It hit your stop loss. After this also, the market continued to move towards the upside. So at this point of time, it is clear that this is a fake breakout. So traders, at this point of time, you have seen both the examples, one for breakout, another one for fake breakout. Now traders, I want a honest answer from you. Tell me how you would feel if I tell you should have entered at this breakout. You should have entered here, keeping the stop loss here, and you should have waited until the end of the day. If you would have done that, you would easily capture this momentum. If you had bought in the money strike price around 250 points gain, If you had bought a premium of 20 points or 30 points, that strike price would have been trading at 90 or 100 rupees because there was a continuous momentum. So this kind of return you would have made. If I tell you, how would you feel? Or what would you tell me if I say, traders, you shouldn't have entered the trade here. See, the market moved like this. This is a fake breakout. You shouldn't have entered here. If I tell you this, what would you tell me? You would straightforward tell me, sir, you're looking at the market after the momentum is over. Everybody can see that market moved here. This was a perfect breakout. And people can definitely look at this and say this is a fake breakout because the movement is visible in front of my eyes. I know this is a fake breakout. I know this is a real breakout. The main reason I'm watching this video is because I want to identify the breakout at the right time. That is, at this area only I should know if this is a breakout, or when I take entry here itself, I should know if this is going to be a breakout or if it is a false breakout. That is what you are here to learn. Correct? Now the truth is, no one with 100% guarantee can tell you if a breakout is a real breakout or if it is going to be a fake breakout. We get to know this only after the moment is over. Here the moment is over, so we know this is a real breakout. Here only after the moment we know this is a fake breakout. So this an experienced trader knows already. So what he does is he trades as per probability. So what is the probability? It's very simple. He wants to enter at a breakout because there is a chance of making 1 to 2% return. For that, he decides a risk. The risk can be 30 points, 40 points or 50 points based on his risk capacity. So when he identifies a breakout here and he sees a reasonable stop loss, without thinking too much, he enters the trade. If the market goes as per his direction, he will be able to capture the big movement. Or else, if market hits a stop loss, without thinking too much, he exits the trade. This is how almost all experienced traders enter breakout trades or any kind of trade. In this situation, what an experienced trader will do is, let's say he entered the trade here, he kept his stop loss. He will wait for the market to move as per his direction. But in case the market reverses like this, hits a stop loss, he will simply exit the trade. But a beginner will not do that, or an emotional person will not do that. They just hold on to the position thinking that the market will reverse, but the market continued to move in the opposite direction, where they should have booked a loss of 1000 or 2000 rupees. Until end of the day, they hold on to the position thinking the market will reverse. They will lose 5000 to 10,000 rupees. This is the biggest difference between an experienced trader and an emotional trader. Traders, now we have come to the final session of the video. In this session, I'll be providing you some tips which you can follow to significantly increase your success rate when you trade in breakouts. I have listed down some tips. There are additional tips also which we will cover. The first thing what I will do is I will look where recently buyers and sellers they have become active, and I will see which level breaks first. For example, here you can see buyers became active, that is why they pushed the market up, and at this level sellers became active, they pushed the market down. Now at this buying zone, did buyers got active? They did not get active. Market gave a breakdown below this level. This simply means buyers have become weak and sellers have become strong. After this, you can see what kind of rally the market did. So this is something which I look at. In this example also you can see buyers got active here, they pushed the market up. Next day market opened with a gap up. Buyers activity has completed here. But here sellers got active, they pushed the market down. Now after this level, we got a breakdown. Now after this breakdown, where is the recent buyers activity? It was here. Did market break this level? It did not break. The buyers got activated here, they pushed the market towards the upside again. So as long as this level is broken, entering a trade might not be a good idea. But let's see what happened in the future. In future, next day when market opened with a gap down and it broke this level and sustained this level, we can clearly understand that buyers became weak, sellers became strong, and they pushed the market towards the downside. Now if I had entered the trade here, if market hit my stop loss, what will I do the next day when I see this? Definitely I will enter the trade. We should not miss out on opportunity in breakout. If we enter at the right breakout, we have a chance of making 1 to 2% return. So we should not miss the opportunity. So here, definitely market went up to this level. Good profits we could have booked here. So this thing is something which I look at in every trade. Next, what I will do is I will see if there is a breakout even on a higher time frame. For example, this is a 5 minutes time frame of Nifty. Here I got a breakout. To take multiple confirmation, I will switch to higher time frame. On a higher time frame, I will go and check if the market has given a breakout here also. Here also you can see market has broken this level and sustaining this level, and buyer's zone also the market has gone below that. So this is where our opportunity was. This is my second confirmation. Looking at higher time frame to see if there is a breakout there also. When I trade in 1 minute chart, I will go and check 5 minutes chart, 15 minutes chart. There also if I get a breakout, this acts as a multiple confirmation. Now next thing what I will do is I will check if the market has broken any important Fibonacci levels. Now you know in my market analysis videos, you see me regularly using Fibonacci. So in this chart, let's say from recent swing high, this was the swing high and this was the swing low. Here you can see market went towards the upside, faced rejection at 0.5 level. If market had gone above this, I will look for only buying opportunity, but market faced rejection here. After this continuous fall, even after breaking 236 level of Fibonacci, market gave a breakdown. This acts as my next confirmation. Now sometimes what I would do is I will wait and see if market retest how far it can move towards the upside. Maybe it will go up to Fibonacci level. After this, if the market moves down, I will hold on to the trade. If it breaks this level also, I will exit because I don't know how far the market will go. So this is something which I look into. Now the fourth and most important thing which I look into every trade is the stop loss as per my risk capacity. For example, in this trade, before taking the entry, I will see where I have to keep suitable stop loss. Should I keep it here or should I keep it here? If this stop loss level is as per my risk capacity, I will not think too much. I'll keep the stop loss and I will enter the trade. If the market goes as per my direction, I will be in profit. If the market hits my stop loss, I will exit. Same thing here also. Let's say I enter the trade here at this breakout because I felt this as a reasonable stop loss. If market breaks this level, I will quickly exit the trade. I will wait for the next opportunity. Next time when market broke this level, I will again enter the trade with a reasonable stop loss. At that time, if market moves as per my direction, definitely there's a chance of making 100 to 200 points gain in just one trade. In the beginning of the video itself, I have told you why we need to trade breakouts. This is where we have an opportunity to make 1, 2 or 3% return also in just one trade. Now traders, apart from these, there are additional things also which I look into. For example, what is the trend of the market? Is it in an uptrend or is it in a downtrend on a higher time frame? This I will look into. When Nifty gave a breakdown here, I will check Bank Nifty chart. Is Bank Nifty, is it there at some kind of support level where from here it can reverse? If Bank Nifty reverse, that time there's a chance of this breakout being a false breakout. Market can move again towards the upside to retest this, or the moment can be false breakout. So I will also go and check Bank Nifty chart. When I'm trading in Bank Nifty, I will come and see Nifty's momentum. So these are some of the things which I follow to increase the success rate. Traders, now we are come to the final session of this video. Now in this, all I have to tell you is in the future when you're trading, don't try to keep judging if a breakout is a real breakout or if it is a fake breakout. Even after you follow all the rules, if the market decides to reverse, definitely it will hit your stop loss. The only thing that you need to keep in your mind is the stop loss as per my risk capacity. Am I exiting at my loss or am I giving more money to the market? If you avoid this, if you cut your losses, definitely you will be profitable. Out of 10 trades, even 3 to 4 trades, if you get a proper breakout entry and you capture this kind of momentum, you will recover all the losses which you have made in the past. Sticking to the rules is very important. Don't be that person who keeps thinking if this is a real breakout or fake breakout. After market closes, you keep saying, I should have entered here. Or don't say that, I shouldn't have entered here because this was a fake breakout. Realistically speaking, no one knows until the market closes or until the moment happens. We don't know if it's going to be real or fake. We just stick to the rules. Now traders, if you check my free Telegram channel, today we shared this setup of Dr. Reddy, where we said there's a possibility of market moving towards the upside. Now if you open Dr. Reddy chart, you can see this breakout sustained. Today this stock made a movement of 55 points. How many people made use of this? Now on 21st of March, we had shared a setup of Titan. They said there's a probability of breakout. Today also, we reminded you that there is a chance that this level will sustain, market will go up. We have clearly said this. Big move can be expected. Now, if you look at Titan chart, market broke this resistance today and there was a good momentum towards the upside. How many people are making use of this analysis? If you see from last 3 to 4 months, every day my team is sharing at least 2 or 3 stocks which has a probability of giving breakout or breakdown. Are you even following these stocks? I don't know. If you're like me who just trades in Nifty and Bank Nifty, it's fine. But if you trade in stocks and you're not looking at those analysis, then definitely you're missing out something important. The link for the Telegram channel is there in the description box below. You can check it out. Now traders, it takes a lot of time for me to create such videos for you. If you enjoyed this analysis and you feel that you learned something new, don't forget to like the video, subscribe to the channel. If you think this kind of content will be useful for your friends, please share it with them. Now that's all for this video. I will see you in the next one.